Something big is happening with gold, and the world isn't ready. At the very moment the world appears distracted by inflation statistics, political theatre and tech hype, the real story is unfolding quietly, methodically, in the shadows of global finance. Just last week, the IMF broke its usual monotone with a bombshell. The global economic order is undergoing a major reset. Pause and let that sink in, a reset of the entire world economy. And amid all this noise, there's one ancient asset rising, not with fireworks, but with a quiet, unstoppable momentum. That asset is gold. And folks, something monumental is brewing, bigger than most people are willing to acknowledge, bigger than the media is prepared to admit. Let's break it down. Goldman Sachs has whispered of $4,500 gold, others $3,700, maybe $4,000. But behind the scenes, whispers are turning into thunderclaps. The United States, historically a net exporter or neutral on gold, is now importing gold at a pace not seen since World War II, when the US became the heart of the post-war financial world under the Bretton Woods Agreement. Think about that. More gold has flowed into the US since January than any time since we dethroned the pound sterling as the global reserve. That's not noise, that's a siren. Then comes Trump's tweet, Easter Sunday, the golden rule of negotiating success, he who has the gold makes the rules. When has a president, any president, uttered anything so pointed, so revealing? It's not just rhetoric. Discussions of gold revaluation, once whispered in corners of academia, are now surfacing in high offices. The Bundesbank, the Dutch Central Bank, US senators, Trump-era Fed nominee Judy Shelton, all pushing the narrative forward. Shelton even proposed 50-year treasury bonds backed by gold. Meanwhile, the current US Treasury Secretary, who previously ran a hedge fund, is a self-professed gold bug whose largest personal holding was, you guessed it, gold. The pieces are all there. You'd have to be blind not to see it. Now here's where it gets wild. If gold is revalued, let's say to $12,000 per ounce, as financial author James Rickards suggested, the US Treasury General account could gain $3 trillion, free and clear. Not borrowed, not taxed, simply created by revaluing what's already in storage. Sound far-fetched? It's exactly what Roosevelt did in 1933 and what Nixon followed up on in the 70s, revaluing gold and shifting the entire monetary system in the process. Let's do the math. M1, the total of physical currency in circulation, is roughly $2.365 trillion. The US officially holds 261 million ounces of gold. Divide the two, and you get $9,044 an ounce. Not conspiracy, just cold math. Could gold be revalued to that number, or higher? Absolutely. In fact, it may be the only way out of a spiraling debt trap. And then there's China. You want to talk about smart money? China isn't just stacking gold. They're flying around the globe buying doré bars, unrefined gold straight from the mine, bypassing traditional markets to accumulate quietly, strategically. Gold ETFs in China just saw inflows of 70 metric tons in a single month, more than double any previous monthly record. That's $7.4 billion in physical demand. And it's not just the Chinese government, it's the people too. Experts estimate China may hold over 38,000 metric tons of gold, 5 times what the US officially claims. BRICS nations are hoarding, sovereign wealth funds are stacking, central banks are repatriating, and the US? It's now importing gold like a nation preparing for something seismic. Here's what most people miss. This is not just about price. It's not about speculation or jewelry or inflation hedging. This is about a generational reset, a return to a monetary system backed by something real, tangible, immutable. Gold is being reintroduced into the system, quietly, gradually. Volatility masks the trend. Sharp dips scare off retail investors, but under the surface, the foundations are shifting. It's like the frog in the pot, the temperature rising slowly until it's too late to jump out. We've seen massive inflows into COMEX and even more so into the OTC markets of London, where leverage is dangerously high and delivery problems loom. T+1 settlement times, supposed to be 1 day, have ballooned to 8 weeks. That's a red flag, a warning of structural strain. Yet behind the scenes, institutions are preparing, scrambling to comply with Basel III, accumulating physical metal while it's still undervalued. Even US states are waking up. Florida just passed what could be the most comprehensive sound money legislation in the country, recognizing gold and silver, especially US mint coins like eagles, as legal tender. Not just collectibles, money. Utah, Texas, Wyoming, Oklahoma, they're all joining in. This isn't fringe, this is the beginning of a domestic monetary revolution. So what's really going on? Why are governments, central banks, sovereign funds, and now even US states treating gold not like a commodity, but like currency, because they know what's coming? The current monetary system, propped up by debt, QE, and digital illusions, is losing credibility. And when trust vanishes, history shows that gold returns, always. To those still watching fiat currencies, manipulated inflation stats, and chasing yield in bubble assets, take note. The biggest, smartest, most informed money on earth is sprinting toward gold. They're not waiting for a CNBC headline, they're acting now. So the question is, will you be too late or will you be prepared? If this message resonated with you, if you're one of the few who feel that shift happening beneath the surface, then now is the time to stay informed, stay alert, and stay ahead, like this video. Share it with someone who needs to hear it. Comment below. Tell us what you think about gold's future, and don't forget to subscribe. Because in the weeks and months ahead, we'll be diving even deeper into the forces that are reshaping the world economy. This is not the time to sit on the sidelines. The reset has already begun.